Welcome to TMS Insights. It's the middle of reporting season, and we've been pretty much between and betwixt, Ben, and we couldn't actually get in the same room for today's video recording, so we're doing it from different locations as a bit of an explanation for everybody. But it's been really interesting reporting this week and through the season to date. So we'll jump right into some results, Ben. One of the biggest talking points and the biggest market reactions was one of the biggest stocks, CSL, and they had a lot to say.
Yeah, they did. So we could, I reckon we could almost do a whole episode on this one stock. So yeah. I'll try and keep it brief because it is a bit complicated. But, I think the fund managers leading into this result, I think were really of a high conviction that CSL was finally going to get those margins back to pre-COVID levels in their core bearing business, which is also what the company had guided the market to expect. And that's where I think almost a protest sort of sell-off occurred, where CSL, again, sort of uncharacteristically, has been guilty of slightly over-promising and under-delivering. And it was a messier result, Jez. There's the demerger of Securus, there's layoffs, there's a restructure, there's a big on-market buyback about to kick in, a lot to digest. But my take on it, and everyone's got a bit of a view on this, and without wanting to talk too long, is CSL will come out of this a much leaner business. The Securus business, which is much more volatile profit-wise, will disappear onto the market, and clients will inherit shares in those, and potentially a higher multiple will be applied to the bearing business, which is the gold part of CSL's business. That's the hope, but they need to get back on track with their long-term track record of under-promising, over-delivering, and it's managing market expectations is where they've really fallen short, I think.
So we have to start it for a little bit. I mean, I know we've got other stocks to talk about. It's such a big one. It's back to sort of pre-COVID levels, like 6-year sort of lows. And again, protest vote seems right. There's ways you could put a positive spin on some of the components of this announcement, this result. But the market just rewards earnings growth, bottom line, and quality of earnings growth, and wasn't seeing the result. Now the valuation, though, is probably, almost a standard deviation below its regular price earnings multiples. The question everybody's asking, is it a buy now? And I mean, clearly it's not. This result leads to lower valuations. I can see that, but it looks like, to me, it's still undervalued at this price, $225.
Yeah, I mean, we've been following this stock for 25 years. I can't remember it ever trading on a PE, sort of very high teens to 20.
Teens, yeah.
And so you got to look at valuation as well. And, when good businesses, and I think CSL is still a very good business, when they go through these restructures, they're going to lay off 10% of their global workforce. They can come out potentially with a much leaner cost base. The focus, they've put their hands up and they've said, we've got too bloated. We've been sort of going into, particularly in their R&D division, it's got too complicated, and we're getting back to focusing on our core business. And you can find that businesses can really rip out of these periods, but that's a bit out. I think the market wants to see the evidence of that occurring, and so I think it's a buy. I still think you want to be there. You've got to remember, the company guided for 10% profit growth, and they've now said it's going to be between 7 and 10. It wasn't the biggest downgrade in history. It was just the nature of
the many
moving
parts, really, is, I think, and a lot of faith for an investor that hasn't been rewarded in the last few years. So yeah, definitely. Okay, moving on. Goodman Group. Now that was a really good result. I mean, data centers have had a fascinating year, haven't they? And this big play into that space is being rewarded for Goodman.
Yeah, and I think Greg Goodman spent a lot of time talking about the data center industry, is spending more and more time every core on data centers. That we should say the core business is humming along really nicely, the industrial business. And, it is fascinating listening to it. I mean, he's sort of called out that there's a lot of players out there that are very aggressively gearing the capex of building out these centres. The cost and the complexity is quite staggering. It sounds easy to build a data center, but the biggest challenge is getting the power. And Goodman is blessed with an incredible land bank and access to power that gives it a competitive advantage over pretty much all of its competitors. And Amazon is its key sort of partner, which is the world's largest storer of data through the AWS division. So I thought it was another great result from Goodman.
Yeah, a standout way to play the space. BHP, again, there's so many moving parts when you look at a business of this scale, and so we can talk about the good or the bad, but market reaction was good. Overall, I think, pleasing result.
Yeah, look, and we've seen the iron ore price obviously hold up a lot better than the analysts expected. The copper price is very strong at the moment, which is now a big part. It's almost a third of BHP's earnings is coming from copper these days. They've got some big new growth options. There was a photo of Mike Henry with Donald Trump in the Fin yesterday, talking about this huge mine in the United States they're trying to get into production. Pays a good div. I think it's there's a lot to like with BHP. Great margins still. Like, they're doing pretty nicely.
Yeah, I mean, the cost guidance on the iron ore was up a little bit, but that's fine. As you said, huge margins, and the core businesses are going very well. And I think what I liked is, they remain very focused, and over the years, the ability of big miners to waste money on brownfields projects. BHP seems to be in a good zone, and understanding return to shareholders is the main game. Let's talk about a couple of other stocks. Fisher and Paykel Health, and maybe talking into Cochlear and Telix. So we're talking broadly in a healthcare space, and some a whole range of stocks there to consider. But Cochlear, good result, looking good as the new product comes to market.
Yeah. So this is an interesting one, I reckon, because it was actually a poor result, but the market's looking through it because the old device is winding down rapidly. The surgeons know a really exciting new upgrade is coming, and so you do get this with Cochlear, and the market has largely looked through the weaker numbers because it's logical. But this Nexus device that is from what we understand, a game changer in this industry, where when upgrades need to happen to the cochlear implant, it'll almost be like when your phone gets an iOS upgrade, it's done remotely, rather than a surgeon having to take the device out and upgrade it. You can imagine how good that would sound to a patient. So that will start selling this financial year. Cochlear has called out that it's really only going to start to ramp up in the second half of the financial year. So it's still a little bit off, but it looks interesting, I reckon, Jez.
Yeah, no, good one. Fisher and Paykel Health, good. And Telix, a newer stock from a lot of our clients' perspective, and one with, really a lot going on there, and pretty exciting now, hey?
Yeah, look, Fisher and Paykel, great upgrade. And ResMed we've seen is just flying at the moment, which is been a core holding for us, so that's good. And Telix, yeah, that's one that's piqued my interest. It's a business that's sort of come out of nowhere. It's going to generate $800 million in revenue this year. And this company only floated onto the exchange 8 years ago. So it sells the world's leading treatment for prostate cancer. It has a renal cancer drug that will have a decision from the FDA next week, and it has a brain cancer. Yeah. Look, it's a bit binary, probably going into that in the short term, but and then it has a brain cancer treatment. The renal cancer and brain cancer treatments have both been widely used outside of America for some time now. So, but getting through FDA is not easy and expensive. This is a business that really has come out of nowhere and looks cheap. Healthcare stocks have been out of favour globally, and founder-led. plenty of
a lot
cash
of
on the balance
optionality
sheet.
in the new product range, and
Completely.
and obviously the share price has been discounted for some compliance related reasons. So if we have a look at Light and Wonder, which reported, but it's also bringing back to a singular exchange in Australia, that's a pretty interesting move, Ben.
Really interesting. And so this is a dual listed company. The biggest shareholder is a funds management business in Sydney called Caledonia, which has got a good sort of pedigree in this area. And so they're going to move off the New York Stock Exchange and solely onto the ASX, which will make this an ASX 50 business, quite a big business. A lot of exchange ETF buying will flow as a result. And the logic in that is Australian analysts are actually widely seen as the best analysers of the gaming industry. We've had Aristocrat here for years, which is the biggest player, and a lot of analysts have followed that. So the Light and Wonder, I think, have had a view that it's better understood in Australia, and it might get a higher multiple when it does solely trade here. And they had a good result.
A nation of gamblers. I'm not
I
sure
saw Jamie Packer. Was widely reported to have put about $250 million into this stock personally, and that's a solid hit. And he's a guy that knows this industry pretty well.
Just two things before we go, Ben. A company that doesn't gamble we caught up with last week, Washington H. Soul Pattinson, ahead of the merger with Brickworks. Just some terrific insights from Todd Barlow and Rob Milner.
It was a great catch up. There's some great stats in there that actually we'll be putting a slide in our review deck that we're doing with clients about some of the reasons we like Soul Pats, particularly as a combined entity. I thought one of his comments there, Jez, was interesting, that he much prefers to invest in private businesses these days versus public, private equity is. Through Soul Pats, you're increasingly getting this large exposure to private equity, but probably, Soul Pats in turn gets access in almost Berkshire Hathaway style access to incredible deal flow that a lot of managers probably don't see because of the permanent capital that they have, which we took out of it is the biggest advantage this business has over virtually all others.
Absolutely, yeah. No, that was great. And in the classifieds business, if we call it, the online portal space, what a fascinating move. So REA Group, we know, had been a little bit underwhelming in share price terms for a little while. Reasonable result we've reported on already, but a fascinating move that Cameron McIntyre, who announced he was leaving car sales a few months ago, has turned up as the new CEO of REA Group, and the market really loved that, Ben.
Yeah, Cameron McIntyre is widely loved by analysts, and he's done an incredible job at car sales. There's a lot of similarities to REA, but we should call out REA is neck and neck with the number one player in India and number two in America. And Cameron McIntyre has really good pedigree at rolling out these businesses into other countries, and I think that's a big tick for me. Is car sales is one of the few businesses that's done that really successfully. So that was good. And if I could call out another one, Jez, because it was one of the best results I listened to, was Seek, which hasn't done a lot for a few years, but its Asian businesses have now hit profitability earlier than expected. And there's a lot of operating leverage in that business going forward from here. So hopefully the patience pays off.
Yeah, excellent. All right, well, we've got another full-on week ahead with reporting, and we'll come back and bring you another insights with all that news after that's all done. But thanks for today.